Hello everyone, I am Dr.N.A.Nazrine, Assistant Professor, Department of Commerce, Jamal Mohammad College, Trichy. Today I am going to take Principles of Accountancy. Let us first see the meaning of bookkeeping. The task of recording business transaction in a systematic manner is described as the art of bookkeeping. R.N. Carter defines bookkeeping as the science and art of correctly recording in books of accounts all those business transactions that results in transfer of money or money's worth. Transaction means transfer of money or money's worth from one account to another account is said to be transaction. Business transaction, whatever transaction taking place in business, that is purchase, sales, etc., should be recorded in the books of accounts in a systematic manner, that is planned manner, is said to be bookkeeping. Next we are going to see definition of accounting. American Institute of Certified Public Accountant Committee on Terminology defines accounting is the art of recording, classifying, summarizing in a significant manner and in terms of money, transaction and events which are in part at least of financial character and interpreting the results thereof. Accounting means it is the art of recording. Recording is the basic functions of accounting. It is essentially concerned with not only ensuring all business transactions of financial character are in fact or recorded, but also recorded in orderly manner. Recording is done in a book called journal. Next, classifying. Classification work may be done in the book termed as ledger. Summarizing. Summarizing includes preparation of trial balance, profit and loss account and balance sheet of the business. This involves presenting the classified data in the manner in which it is understandable and useful to internal as well as external end users of accounting statements. It deals with financial transaction. Accounting records only those transactions and events in terms of money which are of financial character. Transactions which are not of financial character are not recorded in the books of accounts. Then analyzing and interpreting. This is the final function of accounting. The recorded financial data is analyzed and interpreted in a manner that the end user can make a meaningful judgment about financial condition and profitability of business operation and communicating the results thereof. The accounting information, after being meaningfully analyzed and interpreted, has to be communicated in proper form and manner to a proper person. This is the definition of accounting. Next we are going to see branches of accounting. Do you know meaning of bookkeeping? That is correctly recording the business transaction in terms of money. But on other hand, we can say accounting converts bookkeeping information into useful and meaningful statements. As the techniques and methods of business will grow consistently, the accounting techniques also developed in course of time. Many branches of accounting have been evolved. The main important branches of accounting are financial accounting, cost accounting and management accounting. What do you mean by financial accounting? Financial accounting is the original form of accounting which is aimed at ascertaining the profit earned or loss suffered and financial position of a business concern at the end of the financial period. Cost accounting. Cost accounting aims at calculating the cost of each business activity, that is product, services, etc. It also helps the businessman to control the cost of production. Management accounting. Management accounting furnishes necessary information to business which are useful in successful management. that is decision making of business firms. Next we are going to see system of bookkeeping. The recording of business transaction is made under three principal systems, namely double entry system, single entry system, indigenous system. What do you mean by double entry system? A business transaction is the transfer of money or money's worth from one account to another account. One account receives benefit and another account imparts benefit. The receiving aspect is known as debit and giving aspect is known as credit. So double entry system is a scientific system of bookkeeping under which both debit and credit aspects are recorded in accounts book. So every debit must have a corresponding and equal credit and vice versa is the basic principle of double entry bookkeeping. In general, we can say double entry system means every debit there must be a corresponding credit, means such a system is said to be double entry system. Under this system, it is also possible to check the arithmetical accuracy of entries by preparing trial balance. Next one is single entry system. Under this method, only personal account and cash account are kept. It is not scientific system. Next one is indigenous system. In India, the businessman and indigenous bankers have been maintaining accounts in local customs and practices. Accounts are prepared as per the convenience and needs of a trader. Accounts are also usually kept in local languages under the indigenous system. Next, we are going to see accounting concepts. The accounting is the language of business. The business transactions are explained by accountant in a simple form, which can be understandable by others. They have agreed on number of concepts to convey the same meaning to all people through accounting language. Some of the such concepts are business entity concept. Second one is money measurement concept, cost concept, going concern concept, dual aspect concept, realization concept, accrual concept, legal concept, accounting period concept. Let us see one by one. First one is business entity concept. Accountant treat business as distinct from person who owns it. Therefore, the transaction of business with the owners are also to be recorded. Thus, the affairs of the firm will not be mixed up with the private transaction of owners. That is, the accountant may record the business transaction of traders as well as personal private transaction of business, but he should not mix up the business transaction with the private transaction. This concept has not been extended to various divisions of firm. Accordingly, transaction that takes place in each and every department are accounted separately in order to find out the results, that is profit or loss of each division of the concern. This will also help in knowing the relative efficiency of the firm. Next one is money measurement concept. Transaction of a firm which can be measured in terms of money alone are recorded. Such a concept is said to be money measurement concept. Cost concept. The value of assets and properties should be recorded in the books of accounts only at the purchase price, not any other prices. Next one is going concern concept. According to this concept, it is assumed that business will exist for long time. So the transactions are recorded from this point of view. It is said to be going concern concept. Next one is dual aspect concept. Each transaction has two aspects. If a business has purchased an asset, it must have resulted in any of the following. There has been reduction in some other assets. For example, we can say cash, or the obligation to pay for it has arisen. That is, total claims, that is those of outsiders and proprietors, will be equal to total assets of the firm. This concept is also known as accounting equation concept or balance sheet equation concept. According to this concept, the following equation will be arrived at. That is, liabilities plus capital is equal to total assets. Liabilities means outsiders claim. Capital means owner's capital. Or assets minus liabilities is equal to capital. Next concept is realization concept. Transactions are recorded in the books of accounts on the basis of actual happenings. not on basis of possibilities. Whatever actual happenings should be recorded in the books of accounts, not on possibilities. It is said to be realization concept. Accrual concept. Under this concept, all revenues and expenses relating to the current period must be taken into account while calculating the profit or loss. It is not necessary whether they are actually received or paid in cash. On the other hand also, the revenues, cash, expenses, incomes, costs relating to previous year or subsequent year should be excluded even if they are actually received or paid during the current period. Next one is legal concept. The transaction should be recorded in the books of accounts in order to show true legal position of a business. Such a concept is said to be legal concept. Last concept is accounting period concept. The accounts are kept in such a manner so as to calculate the business results, that is profit or loss of a financial period, usually a year. Next we are going to see conventions regarding financial statement. Consistency. The accounting methods and practices should remain same for long period of time. For example, we can say 7 years or so on. For example, methods of providing for depreciation or fixed asset, valuation of closing stock should not be changed often without sufficient reason. Next is disclosure. The accounting system should reveal all significant information to the person concerned. The assets, that is including mode of valuation, incomes and costs, expenses, etc. are sufficiently disclosed in accounting records. Next one is conservatism. This is the policy of playing safe. For example, firm takes into account all prospective losses and leave all possible gains. For example, we can also say valuation stock in trade at market price or cost to price, whichever is lower. Writing off a cancellation of intangible assets or fictitious asset at the earliest. Not providing for discounting on creditors. Thank you.